Hi, I'm Lee Stone, and this is your MaxiForex Week in Review. Today we will cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's risers and fallers. The Euro-US dollar pair was seen under pressure throughout the week. The pair fell just under 0.3% this week and was last seen trading at 135.46. The British pound performed mixed this week against the greenback, making a fall of 0.6% and closing at 1.6001. US dollar Japanese yen had a great week, making a rise of 1.5%. This pair last traded at 83.43. The Canadian dollar US dollar pair traded back and forth all week. By the end of trading on Friday, the pair fell 0.14% and was last trading at 0.9867. The Australian dollar had a tough time against the US dollar. The pair ended up losing 1.2% and closed at 1.0018. Taking a look at commodities, crude oil took a hit this last week, dropping 3.88%. March crude orders were last trading at $85.58 per barrel. Gold, on the other hand, had a great week, gaining 0.53% and closed at $1,356 per ounce. In news this week, the stock exchange of Egypt has remained closed since January 27th because of the political unrest. But now, after the resignation of Hosni Mubarak, it is expected that the stock exchange will reopen on Wednesday. The resignation of Mubarak might also help the Egyptian pound, which had hit a 6-year low on Tuesday. The Egyptian pound had strengthened on Thursday after the central bank intervened before trading closed, one day before protests forced the authoritarian leader from power. In regards to market regulator comments last week, if the exchange opens, it will suspend the trade for only half an hour if its broad share index EGX 100 declines by 5%. But it can be held open even longer if it falls by 10%. Moving on to Europe, Kate Barker, the former Bank of England policymaker, said that officials may be cautious of enhancing interest rate if it risks strengthening the pound, which would undermine the recovery of Britain's economy. In an interview in London, Barker also said that the bank would certainly be uncomfortable if sterling appreciated strongly, because that would solve the inflation problem, but it would be depressing the economy at a time when we really want to see a better current account. The pound has also gained 15 of the UK's 16 most traded currencies this year. This is simply because soaring inflation has prompted investors to raise their bets when the bank raises its benchmark interest rate. Exporters who have benefited from the pound's drop of 20% since the beginning of 2007 could withstand to see some gains in the currency. Here with me to discuss more news is analyst Martin Smith. Hello, Martin.
Hello, Lee.
So, what's next after Mubarak's resignation?
Well, the president's decision to hand power to the military certainly boosted stocks around the world on Friday, as hopes grew for a peaceful transition of power. Stocks also fell from Asia to Europe after his refusal to step down, following 2 weeks of protests. This fueled concerns that the political standoff was a long way from being resolved, and this in turn hurt, of course, investor appetite for higher yielding assets. Oil prices also rose over concern that the turmoil in Egypt will destabilize the Middle East, adding to concerns that global inflation will rise. That sentiment was lifted when Vice President Omar Suleiman told State TV that Mubarak in fact had resigned. And now when that occurred, stocks jumped across the board. The dollar also rose against most of its major counterparts as the turmoil in Egypt and also, of course, concern that Europe's debt crisis may worsen, fueled investor appetite for the safety of US assets. Then we have Brazil's real. Now, this was the #1 performer, gaining 2% as Mubarak's resignation spurred demand for emerging market assets. Though there seems to be a sigh of relief following his resignation, I don't think we're out of the woods just yet. We'll have to see how the transition of power goes forward and who will ultimately take over from Mubarak. If the transition is relatively smooth, with not a lot of protests and opposition from the street, I think we'll see a steady increase for both the Egyptian pound and high-yielding assets. However, if things get messy, I think we're likely to see a much greater push towards safer currencies like the dollar.
The Bank of Korea is keeping the interest rate at 2.75%. Is there any special reason for this?
Yes, the Bank of Korea's Monetary Policy Committee decided at a monthly meeting to keep the base rate at 2.75%. The rate influences a variety of interest rates, including those on overnight loans between financial institutions and more broadly on items such as mortgage and credit card debt. This decision was closely watched, with attention focused on whether the Bank of Korea would carry out 2 consecutive rate increases for the first time in more than 3 years. This being done in a bid to control rising prices. It unexpectedly raised the rate in January for the second time in 3 months. However, South Korean financial markets reacted negatively to it. The benchmark stock index, initially higher after the decision, fell 1.6% to close at 1,977.19, a 2-month low on selling led by foreign investors. The South Korean won, meanwhile, dropped 1% to 1,128.60 against the dollar. Pressure on consumer prices has been growing in South Korea for some time. It's Asia's 4th largest economy, and consumer price inflation in Korea has increased significantly. And this is driven by the prices of petroleum products and farm produce. Also, we can likely expect high inflation to continue and inflationary pressures to persist as the economic upswing continues.
Now, sticking with Asia, what is the impact of Vietnam's currency devaluation on its economy?
Well, Vietnam devalued the dong by about 7%. This is, in fact, the most since 1993. I think it needs to be followed with steps to control inflation. Vietnam's 4th devaluation in 15 months to curb the trade deficit and narrow the gap between official and black market exchange rates now runs the risk of spurring inflation from an almost 2-year high. So for this reason, I think the IMF yesterday called for steps to check price gains, calling for the central bank to have increased interest rates at the same time, which is not the actual case. However, I think the devaluation alone does not solve the fundamental problem, which is a lack of domestic confidence in their own currency, the dong.
Thank you very much, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at MaxiForex.ru.